For much more, let's bring in Tom Lee, managing partner and head of research at Fundstrap Global Advisors. He's also a CNBC contributor. Tom, good morning. Good to see you.
Great to see you, Frank.
Just really quickly, Tom, what do you make of the pullback in futures? Again, all three indices hit record highs. It's a very slight pullback, but what do you think the catalyst is for the pullback this morning?
Well, I think it's normal to expect some profit taking. I mean, we just made all-time highs, and, it is the weekend. But to me, we know that since April 2025, any of these pullbacks have been really shallow. And, next week, we know that there's something very important to watch. And I'm sure a lot of people are going to be hesitant, but we know that ultimately it's a good thing when the Fed cuts.
We have a lot of people in general that are concerned about over-concentration in the market. Ironically enough, we had a guest on earlier, Julia Herman from New York Life, that was saying that concentration was a good thing. But the valuation of this market's been a concern for a lot of people. But your word of the day is undervalued. What's undervalued right now?
Frank, I think Oracle surging 41% after they report earnings tells me that AI is an undervalued sector, because how else do you explain a stock that is as large as Oracle gaining as much as it is unless it shows investors are really underestimating the future growth of AI?
Just to be clear, what's undervalued? Are we talking about the chip sector? Are we talking about software? Are we talking about the hyperscalers? Are we talking about the Mag 7? Or is it everything in your mind?
Well, I wouldn't want to be too specific because, AI is still a 5 or 10-year story. And so I wouldn't want to be trying to drill this down into a really narrow set. I think AI as a theme is continually underestimated because I think a lot of people think this is money being spent without return. Oracle is showing you that there's a lot of future growth.
So with that in mind, Tom, your pick for us today is the IWM ETF, a small cap ETF. If AI is undervalued, why aren't you saying your pick for us today is a Palantir, an Oracle, a Vistra that helps power some of these data centers? Why are you going to the small caps?
Well, a couple of reasons. First of all, Frank, it's because exactly as I said, I wouldn't want to try to pick a slice of AI to talk about being undervalued. But if we think AI is undervalued, what's even more undervalued is small caps, because that's been held at bay because the Fed has not been cutting rates. Fed's been on hold all year. And for the first time since last year, the Fed is cutting in September. A September cut after a pause has only happened in 1998 and 2024. And both times were good periods for small cap stocks.
So a question to you, though. The same weakness in the economy and the job market that's leading the Fed to cut, doesn't that directly impact small caps?
Well, I think that we want to not be oversimplistic in thinking about this. Number one, what is the Fed going to try to accomplish by cutting, especially if they're worried about the employment market weakening? They want to get the ISM to actually go back above 50. They want corporates to start hiring. They want businesses to be confident. So this rate cut is not just a symbolic cutting of interest rates for mortgages. It is really an attempt by the Fed to get the economy to grow again, to actually increase the job market. That's really bullish for small caps.
All right, Tom Lee, great to see you. Your pick for us today, the IWM small cap ETF. Thank you very much. You have a great weekend.
Thanks, you too.
Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, your rate cut playbook with next week's Fed meeting looming. The committee will tell you the best ways to position right now. With all that, joining me for the hour, Steve Weiss, Kevin Simpson, Rob Sechin, and Bryn Talkington. So we're mixed today. NASDAQ's a winner, the others are red. But we have been at record highs. Notable today, the 10-year yield near the lowest level since April. So we're watching all that with the Fed meeting on tap. Will they go 25 or will they go 50? That seems to be the biggest question because the market is convinced nearly 100% you're going to get at least 25. So Weiss, the question is, what do stocks do? That's question number one for today. JP Morgan's trading desk says this could become a sell the news event. I've heard that from others as well, because the market has continued to ramp up, today notwithstanding, ahead of that meeting. What do you think?
So I think there's a real possibility, but it's not going to turn the rate cut. If we get 50, the market takes off. 25 is a base case. I think that, and what JP Morgan's saying is that that's in the market right now. I agree with that. However, it's going to turn on what the narrative is.
That's right. Powell's words. Powell's words more than the numbers are probably what matter more than anything right now.
Right. And look, it's clear from the numbers that jobs are going away. Claims are high. Job growth is low. It's basically flat. So they're going to decide what is going to move the most. Is it going to be inflation continuing to spike up? And then they have an out. That's tariffs. It's a one-time event. So I actually think they're going to be somewhat dovish, when they go next week.
Okay, how about a dovish 25 cut? That great for the market?
I think it goes up. I think it goes up.
Yeah, Bryn, what about you? How do you game this out?
I think we get a 25 basis point rate cut. 50 doesn't seem to be necessary. I think we get a 25 basis point rate cut. They acknowledge the weakness in the jobs market. I think he's definitely going to get questions about the data itself, right? The 911,000 revisions we have. So I'm really going to be curious to hear how they thread that needle. I think that the market, once again, is a pull forward mechanism. So we already have this priced in. I don't think we're just going to get some rip-roaring rally. I think what's been working will continue to work. And so I think you're going to have sectors like real estate, private equity, et cetera, that will continue to be these beneficiaries of a lower rate environment. And I don't think we are going to be one and done.
Well, I've heard, Rob, for, I don't know, like 2 weeks that it's priced in. How could it be priced in if the markets continue to set new highs? Maybe it's not priced in.
Well, there's a little bit of positioning there, too. If you look at institutional investor positioning, we're in the 58th percentile, which Deutsche Bank would define as decidedly neutral. So I agree with Steve. I think it depends on the communication that comes out with it. But it's also what the data informs from here. So short run, you might get a move. But then what does the data inform from here? And I think if the data doesn't lean towards a direction of further cuts, not a disaster where you're seeing growth that completely roll over, but just leans towards the ability to have further cuts, given the moves in stocks, given the move in specifically small caps, treasuries, gold, you could see a re-rating that's maybe more substantial. I just don't think so, because as we go into the fourth quarter, I think you're going to see a pretty big positioning chase from here. It's more next year.
Okay, that's what I want to get into. That tees it up perfectly. Like the best rate cut, right? We think we're going to get a cut, 25, 50, whatever. Your best positioning for a cut. Do you stay big or do you go small? Russell 2000 is on pace for its 6th straight week of gains. Small caps are having their best quarter since the end of 2023. The Nasdaq's up 14% year to date, and the AI trade, as you know, has been back on lately. Stay big or go small post rate cut between now and the end of the year. What do you do?
Well, I always stay big, so I'm a little bit less objective than some of our friends here.
Okay, well, what do our friendly viewers? What should they do?
Follow me and stay big, because the challenge is moving forward, to Steve's point, if the data breaks down, then you're going to see the small cap, the more speculative side roll over.
Even with rate cuts, if the data breaks down?
I think so, because you're betting on a stronger economy. So here's the thing about the sell the news, because I thought that was a really interesting note. If we get a 50 basis point rate cut, I think that would be a sell the news event, only because from my perspective, it could be a little bit scary. Like, why do they need to do that? I'd rather see it be more of a cool glide. Like, give me 25 now and a few more 25s. 50 may spook the market a little.
It would spook the market very short term. Very short term.
Consumer sentiment came out negative today.
Yeah,
but I still think 50 takes it higher. Whatever the knee-jerk reaction is, it's so tough to account for. Usually it's a head fake.
How would you answer that question? Stay big or go small? We're thinking about outperformance now, right? Not what we like, this, that, and the other.
Yeah.
Outperformance between post-cut and end of the year.
Look, I would stay big because I think it'll continue to work. And if you take a long-term approach rather than trying to buy the smaller caps here, the smaller caps, they're going to be hit a lot harder by a slowing economy. And that's what we're seeing.
But why then is the Russell up 5% over the last month if the data has been showing that the economy and the job market is slowing? Well, wouldn't that be one of the leading indicators in the market that agrees with the data?
Well, these are new markets. So generally, yes, but generally the small cap starts moving, and some of the junk, I'm not saying small cap's junk, but we've seen that move also, and that typically moves. They're the last ones to move. So as you look for what's not participating in the rally over the last few years, it's small cap. We've had some head fakes on small cap, so it's a catch-up trade.
Well, you just said small caps are the last ones to move. We both know that, generally speaking, small caps are the first ones to go in and the first ones to come out.
Go out, right.
So, but they're not the first ones to go in because they're not going in. They're up 5% over the last month. Even in the face of data that's been a little squirrely, and job numbers that just flat out haven't been good, right?
Understood. My point is the
but not-
dynamics. Let me just finish the thought.
Yeah, go ahead.
But the dynamics in this market, unlike any other cycle. They just are, because everything that's in index funds, because retail investors aren't really selling much on news. Some are, and creating those bottoms. But overall, people are adding to it. We really haven't seen that, while we've all been in the business. So over the last few years, it's changed. So that's what's affecting small caps.
Well, to your point then, so maybe there's full positioning towards the mega caps. And if it's 50, people say, well, I mean, there's going to be a huge bang for your buck in other places of the market finally, and then you get a rotation.
Why would that happen? Because for 3 years, there's been very little in the way of refis for these small caps. They're dependent upon capital markets. Large caps aren't. So
yeah, right. Rates going down and capital markets already picking up is good.
And I think that the small cap that's going to go out and refi that needs money, the cheaper money is better for the small cap. So we've seen it. Whether that trade
We've
continues.
already seen it. Rates haven't even barely budged.
We've seen the move in the small caps.
It depends on the follow-through from an economic standpoint, period, with small caps. If you get follow-through, which means that you're cutting in a benign scenario, small caps will continue to run. They will continue to do well.
Aren't you kind of doing that now? Aren't you kind of cutting in a reasonably benign scenario?
Yes, but
you're still hanging in there.
But that's why I talked about that intermediate thing, Scott. If the labor market continues to break down and the consumer fundamentals get worse, that indicates further economic deceleration. And I think small caps have a tough time with that scenario. So I think we're waiting for data right now to confirm the pace of the slowdown. How dramatic is it going to be? We personally don't think there's going to be a recession, but small caps have run so much here recently that I think the safe playbook is what these guys are talking about, because remember, the highest quality parts of the index are being driven by AI, data center demand that is still robust. You saw it through Oracle. All those trends are very powerful in place.
That's fair.
And this is speculation as to whether we are going to be able to get that economic acceleration with rate cuts.
That's fair.
And you're going to be able to perfectly engineer that handoff of the baton from the one to the other.
Bryn, that's what we talked about yesterday at some of the notes, that the visibility, AI visibility, is just too good now. That why would you move away from these kinds of stocks? I think that was a UBS note yesterday. Wolf also commented on this trade saying they believe that the mega caps are going to continue to do very well.
Well, also, they're growing twice as fast as the market. Their margins are 2 to 3 times of the market. And when you think like large caps can't move anymore, well, Oracle is not a small cap stock or a mid cap. And so I think this spend, that right now we're in this environment where if you spend more as a hyperscaler, the market will reward that today, right? And so 2 years ago, CapEx from the tech sector, or really the Mag 7, was 20% of the S&P 500 companies. Right now, it's 30%. 7 companies are 30% of the S&P 500 CapEx. It's just massive. And so I think you're going to continue to see people moving in that direction. I think, though, the way you want to also think through is as a rate cut comes down, those long duration, high growth companies, like I own like an IonQ or like a HIMSS or like the Palantir has already run up. But I think you're going to get a continued move in these longer duration, high growth companies that don't necessarily have much of an E. That to me is how I would play the small and mid cap, is on the growthier side versus buying an IWM, which I agree with Rob. I think it's more just like a trading mechanism, because I don't think the economy, like Q4 of 2020, that was a fat pitch for small cap. Right now, I think it's going to be a fits and starts.
It was Morgan Stanley's trading desk that had that note yesterday talking about it's going to be a Herculean task derailing what has been increasing AI visibility. Let's talk about Microsoft. Speaking of all this, they're going to snap a 5-week losing streak unless something dramatic happens today. And Microsoft and OpenAI have reached a deal to extend their partnership. Reports I saw say Microsoft will acquire at least a $100 billion stake in OpenAI. The Journal reporting today as well that truce clears the hurdle in their path for a for-profit conversion, that, of course, being OpenAI. Everybody owns it, including you.
Yeah, look, Microsoft goes through these periods, even when the stock's trading in the 20s and 30s, where it's just nothing's going on, source of funds, but the fundamentals continue strong. I love the fundamentals. Clearly, you know, OpenAI getting that relationship right, which they appear to be doing, is helpful. But you also have this major upgrade cycle that's happening, you know, with 11. And you're going to see a lot of new, you know, PCs, laptops bought, but you're going to see a lot of new subscriptions. The subscription price is going to go up. So I think that they're very, very well positioned now to continue moving higher. But it's the most hated, except periodically, Apple, of the Mag 7. Nonetheless, I'm still there, haven't sold any. It's not one of my largest positions. Meta is one of my...
Why is it one of the most hated? Why does that make sense? I mean, look, let's be
the
clear.
growth isn't
the stock's up more than 20.
Right.
Microsoft, we're talking?
We're talking Microsoft.
The stock's up more than 21% year to date, so it can't be that hated.
Well, look at what Apple's up, you know, recently from the lows. So I'm just saying, when you talk about it, so it's when I say it's most hated, Grant, that may be an exaggeration.
No, I know, but why is it even? Why do you characterize it as such when it was like the first out of the box with the OpenAI partnership?
Right, because it's been a source of funds for some. While you've seen, if you go through the charts, you compare the two charts between Meta and Microsoft, you'll see a complete different chart pattern on the short-term basis. People use it as a source of funds. It's not cheap, neither is Meta, but Meta's growing faster.
Well, who owns Meta on the desk?
I do.
How come? I mean, I'm kind of surprised the stock's trading the way it is with really no anticipation whatsoever of Meta Connect, which is next week in San Francisco.
Yeah.
That's a big deal. I mean,
huge.
Normally a stock you'd think would sort of run up into an event. Now, maybe you get updated glasses and stuff like that, and you're going to hear from Zuckerberg, right, during his keynote out there. Is that not expected to be a stock-moving event?
I just don't think they're focused on it.
I mean, Meta's our #1 pick for the year. We love the stock. I own both Microsoft and Meta. I think from a hardware standpoint, if you haven't tried these glasses, you need to. There are sunglasses for the most part. I know there's transitions, but I think when they roll out regular glasses like we're seeing, that this hardware competes with anything Apple puts out. So I'm super excited about the event.
Yeah, I think that people aren't focused on them as a consumer product company,
I agree with
which
that.
they have the whole, you know, it's sort of like Apple when you take a look at it.
No, but you don't think Zuckerberg's going to stand up there on the stage in San Francisco and talk about their AI ambitions?
Oh, I think it's phenomenal.
Right?
No, I agree. It's one of my largest.
It is phenomenal, but there's this transition with all the Mag 7 from cap-light businesses to cap-intensive businesses. In market tolerance of that, you got to judge every time they're on stage and talking about what they're going to spend in this space. I think right now the market is completely buying into that. I am not using Microsoft as a source of funds. We're a little different. We've owned it a long time. We also bought Meta in December of 22 on this show when it was 12 times earnings. They haven't sold a single share. But when you look at Microsoft, the reason to own it is 46% operating margins, 27% return on investment capital, and 26% free cash flow margins, and the highest and best position quality tech company in the world. It is expensive, but I think that price premium is warranted, at least right now.
There's also Apple, Bryn, which the new iPhones go on sale starting today. Their Air launch, the iPhone Air delayed in China over a digital SIM card issue. We'll see what happens there. Some models are available because they use the physical SIM rather than a digital one. Tim Cook, by the way, you probably saw him with Jim Cramer already on the network as Jim was, I think it was in Kentucky. Well, Tim Cook's going to be a guest tonight on MAD. You'll see more of that interview, and you don't want to miss it, of course, because you just don't hear from Tim Cook that often. You do around earnings with Jim and Steve Kovac, but this is a good chance to hear from tonight, 6 o'clock. Bryn, what about Apple here?
Yeah, I mean, I already put my order in for the new earbuds in the 17 Air, right? I've been really clear. Apple is a hardware company, and aesthetics do matter. And you have I had a 14 Pro. The Air is much, much stronger, much faster. The camera's pretty neutral, but I'm not Owen Mills here. I just need to take a selfie or portrait every once in a while. I think that this is going to be a great launch for them. I think that with the earbuds, do that instant translation when that comes out next year. I think this refresh cycle, I think people want to be negative about it, but I think it's going to be strong going into Christmas. I think those earbuds are going to be very, very popular. across those who have the 16 and 17 and can use the new technology. So I'm excited about it. They'll fix the China issue. I mean, Tim Cook and his team have a master class of manufacturing, and so they'll get that worked out, I'm sure, in short order.
It's been a big week for AI-related names. I mean, Oracle's obviously going to steal the thunder. Nebius, because of the deal with Microsoft, is obviously the runaway winner, up 36%. But many of the names, especially in the power area, have done well. Vistra, Vertiv, for example, GE Vernova. You bought more, Rob, NRG, and you bought more Monolithic Power Systems. Tell me more.
Correct. It's all about data centers and getting and regulating power. It's our favorite way to get exposure to data center consumption. NRG specifically, high quality company that is not that expensive at 20 times. Strong balance sheet relative to its utility peers. Highly efficient, low emission nat gas is what they're focused on. And if you believe in the consumption story for data centers, this is going to continue to be a huge beneficiary. You know, we were very early on Vistra. We were early on this trade as well. We think there's room to run. If you think about monolithic power, kind of totally different, it's regulating the usage. And there's so much need for regulating power usage in these businesses. Now, that's something we don't usually do, which is pay 44 times earnings for a company. It's not central to what we do as money managers, but we think the fundamentals are so strong in this company, and this is one you can own a new position for us.
The flip side of maybe questioning the fundamentals of a company, you sold half your Adobe, which is notable because it's sort of the have-not, at least one of them, perceived by the market in the whole AI arms race, down 40% over the past year. They did have earnings. Let's look at Adobe, guys, if we could, please. They did beat. They did give better than expected current quarter guidance. The stock, meh. I mean, I think the jury is still out, that the market is not so convinced that they're going to be as formidable as some would have expected in this whole new area. Is that why you sold half the position?
We did.
Ahead of earnings?
We sold it ahead of earnings yesterday. It's funny, it bounced up a little bit after earnings, and I was like, oh, we made a mistake. But we'd been patient for so long, and from our lens, we felt like we were swimming against the current. We had some losses that we could take. There's not a lot from a portfolio positioning standpoint this year, and given how long we've owned this, that we could take losses in. Overall, earnings were solid, though. The AI revenue continues to come in above expectations, so we kept a little bit of it, but we wanted to reduce it in favor of some other things.
All right, we'll wait to hear from Jim Lebenthal. But it's been a real boon for banks and private equity this week. I mean, private equity hasn't traded all that well of late. The banks have, as you know, and many of those stocks were up. But Bryn, you bought more KKR. Can you tell me why? Stock's up 6% week to date, but as I said, over a greater period of time, it just hasn't been all that great with many of these other names.
Yeah, so I started taking a position right around the tariff, a little bit before, a little bit after in April. And so if you look at the economy, we're getting the OBBB go through the economy, rates are coming down, the IPO market, I think, is not only thawed, is slowing. If you look at KKR, look at 2026 estimates, looking to grow revenue and earnings 30%. They have great fee-related earnings. They're growing their assets in mid-teens. And so I just think this is, to me, a much better way to play the economy, the thawing of the IPO, lower rates than like a small cap. And it's done really well since the April-May period, so I'll continue to add to it on weakness.
Weiss, what's your take on these?
You know, I keep looking at them, and I regret not buying them. If you recall, their yields were monstrous a year ago. I think they're going to do well. I mean, they've got so much pent-up capacity. They've been looking to exit. And they've got to return capital to share.
Well, you play in this, I
LPs.
think, through Goldman as your principal way of looking at this, correct?
Goldman's right there. I mean, look, we're looking at selling a couple of companies now, maybe IPOing one, and Goldman's our first call, pure and simple. So we stay with the big banks. Evercore's another great bank, that gets a lot of business. So to me, this is going to be their golden age as the IPO market continues to open, and we're seeing it open just for high growth right now. But as it opens for more and more companies, I think you're going to see the private equity firms do very well, and the banks especially, because they participate on both sides of it, both the advice side and then on the public listings.
Yeah, I think Steve's right on the banks' capital markets activity. Going to pick up net interest margin spreads. Going to widen out. I think a little bit for the banks. Yeah. We own in the alternative managers Blackstone. We bought it on the show in May. It's April, May. It's up 35% since we put money into it. I mean, this whole democratization theme's not going away. I think people are looking at all public markets with yields coming down on fixed income, stock prices elevated and rich. They think there's high returns in private markets. I think they're among the best in the world, if not the best in the world at doing that. Them, Apollo, of the large cap providers.
Record high for JPM today.
JP Morgan, Goldman Sachs, they've been our biggest winners this year. We expect that to continue.
All right. Gold as well. Fourth straight positive week higher. You have and UBS, by the way, raised their target to 3,800. I mean, some targets, obviously, I've seen. I think the last time I talked to Jeffrey Gundlach, who, by the way, I'll be with next week, of course, as usual on Fed Day, this time from out at Double Line. I think he was talking about 4,000. And others have lofty targets like that too. What's your move related to gold today?
So we own AEM, Agnico Eagle. It's been an incredible winner for us. It's up 100% year to date. So we took half the position. We wrote a covered call for 3 weeks. It gives us a participation up to 160. We bought in a little bit over $3 for it. There's just some vol in gold, and we wanted to hedge it a little bit.
All right, we'll bounce for a quick break. We'll come back. We have more moves ahead.
Al, amongst all of the Dow 30 stocks, HD has the most significant amount to gain from the 30-year mortgage rate falling, as this would drive existing home sales to pick up after a housing ice age over the last 4 years.
Hold on. I want you to know I have owned that stock since Arthur Blank was running the company. That's how long I've had Home Depot. I am going to add, I just did. I took your advice. I added to the collection here.
All right, well, how fun was that? Josh pitching Home Depot to broadcasting legend Al Michaels on the show yesterday when he was in Green Bay, ahead of last night's game. Al, you heard, bought more. Kevin Simpson did too. Would you hear this too? You like this pitch?
No, it must have been a coincidence, because I received a cold call from a young stockbroker also from Long Island yesterday. I didn't get his name, but I think the firm was JT Marlin, maybe. Anybody see Josh after the show? No, in all seriousness, I couldn't agree with Josh's call more. We had this as our final trade last Friday. I bought shares last week at 407. We bought more shares yesterday at 417. The super cycle on rate cuts is great for the retail consumer as well as their pro division. Love the call.
You own it?
We do. And
what do you make of the pitch? Here, the stock's up. Nice looking chart.
It's a nice looking chart. Skies are clearly clearing for Home Depot, Lowe's, businesses like that. With they're beneficiaries of low rates. They're beneficiaries of more spending. If the macro conditions continue to stay intact, I think Al's right. By the way, he did a great job calling that game last night, as he always does.
Yeah, it's always
one of the two best voices in sports, I think. Love him.
All right, Kevin, you also bought more IBM.
This was without the help of a young stockbroker, but we really like IBM. It's sold off since the earnings. I thought the earnings were really good, and we just haven't seen it move. You've got a 17 times forward earning, 2.5% dividend, quantum computing, Watson AI, lots of things for an old school tech company.
I agree with that. I was looking at it actually yesterday, today.
But that's okay. That's okay. If you were talking to me, you'd have looked at it in May when we did.
What's it up over that period? Just put up IBM like 1 year.
From May 6th,
look at a 1 year, not a 1 month. let me see this thing.
It's May 6th.
I mean, all right. So where it was to where it is, there are some who are talking about this being like the winner, or certainly high up on the stack in quantum computing.
Yep.
Like I know a lot of these other names have gone crazy over time, but people wrote this thing off.
Totally. This thing is up 52% since we bought it in May. Okay, and it is clearly getting the attention. It's a beneficiary of everything that we're talking about today, whether that be in consulting, or leading to their AI exposure and quantum computing. I think this is a great business. A little pricey here from where it was. I mean, I think you do have to pay attention to price, no question.
Weiss likes to overpay for things.
He does.
Only
you see some of his
buy high and sell higher. Didn't somebody say that somewhere?
Yes, that was our friend Joe T. Check out the book. It's probably still available. You also bought CME Group, more.
We did.
Right?
We did. This has also pulled back about 10% since its highs, down 5% over the past month. Amazing earnings. We always like to get into this name in advance of December. They have paid historically a very amazing special dividend each year. We're hoping for that again this year. But the real reason I liked it is they were the main sponsor for the Robinhood conference. Britton, you'll love this. Could you imagine 6 years ago during COVID that CME Group would sponsor a conference for Robinhood? They're going to be posting the futures contracts for them. It's just a really, really exciting partnership.
Bryn, you got something you want to add there? You're a Robinhood shareholder.
Well, number one, Robinhood, it is amazing. As I've talked about how this company, we've all seen it grown up. It's very exciting about this partnership. I also got to say a shout out for, I own IonQ. And so you talked about IBM. Google talked about quantum. IBM talks about quantum. NVIDIA talks about quantum. But really, IonQ is, I think, the best in the business there, and it's having a monster day today. So if you look for a long-term, long-duration, high-growth, VC-type opportunity, I think IonQ gives you full exposure to that quantum computing.
Well, if I recall correctly, and you tell me if I'm wrong, you've been a little bit of a trader in this name, right? I know you've held it for a while, but you've taken down the position over time, if I'm correct.
Yeah, I bought it. I own it at 33. I sold. I think it ran up to 60, and I sold half the position, and so I'm still in it. So it's a volatile stock, right? It's up 17% today. So this is like you build the position because there's no E here, right? There's not going to be an E for years on this company, and so you got to size it right and trade it right.
All right, good stuff. Bryn Talkington, your final trade's what?
Yep, I like Ethereum, but I love the volatility of BNMR. You can sell calls and get about 9% over a month.
All right, thank you, Rob Sechin.
I like that too, but I'm saying NRG. Talked about it earlier in the show.
All right, we'll get into the other stuff later. What's yours?
The CME Group, the tailwind of volatility is a tremendous beneficiary for them, and I'm looking for that special dividend in December.
You guys have any original ideas?
That was poetic, though, the tailwind. I like that point.
Are we just repeating what we talked about already? Weiss.
Yeah, IBIT. So the Winklevoss twins were on Squawk Box this morning. They talked about $1 million price tag on a Bitcoin. So I don't think we get there. Still don't use the use case, but I love
That's all you needed to hear. Okay.
Yeah.
All right, I'll see you on the closing bell.
That's all you needed to hear.
That's all he needs.
That's all you need.
The exchange is now.
Hello, welcome to Blue Cloud Trading. I'm George. It's Friday, September 12th. It's after the close, and in this video, folks, we're going to talk about 14 of the stocks that they talked about on the halftime report. And this morning, Tom Lee was also on, so we're going to take a look at we'll look at his ETF. Okay, we'll also take a look at Oracle. They talked about that stock as well, and we'll take a look at SPY, the Qs, the Dow, Russell 2000 ETF. We'll take a look at Tesla, Apple, Meta, NVIDIA. You can see Tesla was up 7.36% today. And we'll look at the strongest sectors and one of our requests, PL, which is Planet Labs, which was up 1.14% today, but it's been on a tear here recently. So let's get into it. We're going to first take a look at the markets and what happened today, right? Let's summarize here. The Dow Jones was down 0.59%. You can see gap down and then just dropped a little bit. The NASDAQ actually from early in the morning just started moving up. Okay, it was up 0.44%. These aren't big moves here. The S&P 500 was up, down, then closed down 0.05%. Russell 2000 was down the most, 1.02. So it gapped down and then dropped. You can see that little downward channel there. All right, let's look at the heat map. We're going to look at this on the for the daily performance and for the weekly as well. So you can see that a lot of the software companies didn't do so well, except for Uber. That was up. Microsoft, Apple was up. Tesla was up 7.36. Palantir was up 4.3. The healthcare stocks did not do so well, except for Abbott. Financials were also kind of down, except for JP Morgan, Wells Fargo, Citigroup. Walmart was up, Costco was up, but a lot of the industrial stocks were down. Utilities did pretty well today. Basic materials were down mostly, and energy was down. So was real estate. It was kind of mixed, as you can see here. What about the 1 week performance, though, for these individual stocks within the S&P 500? 1 week performance, looks a little bit more more green here. You can see NVIDIA, for example, up 6.47% for the week. Oracle up 25.51%. But that's it's actually declined quite a bit since that big pop, as you'll see in a few moments when I go over the charts. Tesla up this week 12.86%, and Broadcom up 7.46%. Palantir up 11.96%. All right, and then let's look at the groups section here. This is the individual sectors. How did they perform for the week? Well, interestingly enough, utilities, all right, a defensive sector was actually up the most for today. I take that back. Communication services, technology, consumer cyclical, and then the worst today was the healthcare, industrials, and basic materials. And if we look down here for the 1 week performance, technology took the lead once again. It was up 3.38%. Utilities was second, financials were third, and then healthcare was down 0.65%. And here's the 1 month performance. Communication services at the top. All right, so now we're going to take a look at the, we'll start off with the index ETFs, and then we'll go into those stocks that they talked about. All right, like I said, there's a whole bunch, including Home Depot, Adobe, Oracle. So let's look at the SPY, S&P 500. Let's make this chart a little bigger here. Boom. All right. And what we're using, folks, is the Ichimoku indicator, and this is going to help identify the strength of the trend. It's still in a very strong trend upwards. As you can see here, we've got the positive we've got the Tenkan-sen, the 9 period above the Kijun-sen, the 26 period. Price is above both of those moving averages. This white line that you see here is the closing price, today's closing price projected 26 periods into the past. And what we're looking for is to see where that white line is, okay, in relation to the candle 26 periods ago. If it's above it, like it is in this case, that's bullish. If we go back in time, over here, back in, you can see here around January 23rd or so, it got underneath, okay, and that was not good. So the other part of the cloud itself, the Ichimoku cloud, that's the Senko span A. All right, that's this upper light colored blue line. We want that to be above the Senko span B, the purple line. Okay, and that's what comprises the cloud itself. And we want price to be above the cloud always. And how does this derive? The Senko span A and Senko span B? Well, it takes the midpoint of the two moving averages here, projects that 26 periods into the future, and that's where you'll find it. And then the purple line is actually the midpoint of the last 52 periods. It takes the highs, lows divided by 2 and projects that 26 periods into the future. The green line, the 9 period, is also taking the midpoint, right? So highs and lows divided by 2, and the 26, same thing. That's why many times you'll notice that these moving averages, unlike traditional moving averages, will actually flatten out. See how that's like a flat line horizontal? You won't see that. You won't see that on a typical moving average that's looking at just the closing prices. And when that starts to flatten out, it actually provides even more level of support. Okay, it becomes a stronger level of support. You can see here, for example, it was going diagonal and it closed underneath briefly. But when it was flat, price actually held and then bounced off of it. Same thing here. It's really interesting indicator. Originating in Japan, just like the Japanese candlesticks, right? For identifying the highs, the lows, and the opening and closing price. If you guys are new to technical analysis, okay, let me show you guys just real briefly. Here's the opening price on a green candle. There's the closing price. It's the body, okay? The open is at 9:30 in the morning. Here it is at 4 p.m. in the afternoon. The high of the wick is how high did the price go throughout the day. How low did the price go? That's the lower wick and the higher wick, okay? If it's a red candle, the opening price is at the top of the body. The closing price is right here at 4 p.m., okay? And then the lows, same thing apply, right? How low did the price drop before finally closing at the at this closing price, right? How low did it go before the buyers pushed it back up and reached that level? And there's a lot of cool candle patterns that you'll see here in the Powell reference sheet. I'm sure I'll share some of those with you in a few moments. Anyway, here's the S&P 500. It looks good, okay? And if we look at the weekly chart, that's important too. Very strong uptrend, okay? The QQQ ETF on the weekly chart, still looking good. In fact, this week got above that 583.32 level. And here it is on the daily chart. You can see that it was consolidating here, and it's 2 days now above. So this is very bullish, folks. ADX is moving up. That's the momentum. okay, that white line there. And when we see the green line, the positive DI9 above the negative DI9. So that's the positive DI9 above the negative DI9. That's bullish. We want to see that going up, red line moving down, and the white line moving up. That's ideal situation there for a move up. Dow Jones doing the same thing. The positive DI is dropping a little bit, and that's obvious. So you can see how it dropped down 0.56%. That's what led to that. But overall, it's still a very strong trend, still holding up above this support level right here. And if we look at this, of course, on the weekly chart, also looking good. Okay, above the moving averages, above the future cloud there. Everything is looking good. Russell 2000 today was down 1.02. On the weekly chart, it actually created a reversal candle. A reversal candle, which is called a doji. These are kind of dangerous, these candles here. Because what that represents essentially is that the opening price on Monday at 9:30 and the closing price on Friday at 4 p.m. was at the same exact level. You can see the movement throughout the week, right? And this is where finally the price closed. So the buyers didn't push it up and the sellers weren't able to push it down. It just it was flat for the week. Now, if we look at the daily chart, you can see that also here, that it's basically just consolidating right now, right? It's in this little box. So I'd want to wait to see if what happens next week. Will price, for the Russell, get above that high? If it does, then expect it to move up to the next level of resistance, which is a monthly level of 244.98. Let me switch it to a monthly chart. There's the high right there. Once it breaks that, and I'm sorry, that's the high right there from that circled candle right there, which is from November 30th, 2021. It will be coming back to that level again. And if it can surpass it, then there's a higher probability and that the Russell will continue to move up. If it stalls and starts to revert backwards, that's not good, obviously. And here you can see what happened last time it reached that level. It dropped. So let's hope it doesn't happen again. Maybe third time's a charm and it breaks through, and then we'll see it move up. The VIX today was up 0.34%. Here's the daily chart. But it's at a very healthy level of 14.76. It's under the Ichimoku cloud. We don't want the volatility to be increasing. That's what that is, essentially, the volatility index. We want this to be declining and staying at these low levels. We don't want spikes like we had back in April, right, with the tariff situation. FEZ, Euro Stocks 50 ETF. Looking okay, but price is still holding up above the moving averages. But as I mentioned in the prior video, the faster moving average is still under the slower one, so we don't have a perfect, scenario here, and that's why it does not get a blue flag right there. All right, let's keep going. Now we're going to get into the stocks they talked about. Let's start off with Oracle, which is an interesting one because, as we all know, it gapped up and had a huge move. I mean, at one point it moved up over 43%, and then it's given up a whole lot of that, right? So from that high up here, it's dropped 15.7%. Now, as I've mentioned before, whenever you see price spiking or gapping up and it's like that type of a move, expect profit taking to start taking place. People have been holding this for so long, right? Waiting and waiting and waiting, and then they got rewarded, okay? And so they want to close out that position, take their profits, and then maybe put that money to use in something that is in the beginning stages of popping. And so right now you can see we get that bearish engulfing type pattern right here, right? And then it got under the low of that candle, so it's dropping some more. But it still has a blue flag. And the reason I put a blue flag is because it's still above the moving averages here. And the cloud is still bullish here on the daily and on the weekly chart. Even though it has that long wick from that decline these last few days, it's still looking pretty bullish overall, okay? Would I be jumping into this right here? No, because the price is still dropping. We don't know. I mean, it might stall once it reaches the support level and then build a new bullish candle. That's what I'd be looking for. IONQ, which is IONQ Inc., Technology Sector Computer Systems. That was talked about on the show. Here's a daily chart. Big move up, 18.19%. This would have been a good one to day trade. Here, let's look at the 1 minute chart on this one. If we go back to this morning, you can see how Ichimoku works on multiple time frames. That would have been a great trade right there. You can see how it popped in the morning right there. That green line On the shorter time frames represents the opening price, and then the red line, dotted red line, is the closing price from yesterday. So you can see here it just basically steadily moved up, right? It just moved up and it reached about 15% in 25 minutes. That's insane. But then after that, it kind of just, it started to lose its momentum, basically. You can see that right there. And it reached a high of somewhere around $56, but then finally closed at around $55.60, right? So anyway, let's see. So what do I recommend about this one? Well, on the daily chart, it's had a big move here. This probably, a lot of profit taking is probably taking place here. Let me look at the weekly chart. Did it get above that? It did. It got above the high of this candle, which is 54.74. All right, so it got above that level this week. There's a higher probability that's going to continue moving up. Here's the high volume bar. Here's the positive DI moving up, like I said earlier. You want to see that happening. You want to see the ADX moving up, negative DI going down. I've got it at a setting of 9. It's working. It's working right now on the weekly and on the daily chart too. The only thing I'm concerned about is the distance from, the highs up here, okay, to where the moving averages are. That's a bit of a distance, and so, but it's above. You can use the 54.74 level as a support level. All right. Goldman Sachs is also looking really good. You can see that it broke through this very long extended consolidation, right here. That happened on Tuesday this week. All right. Moved up. Now we got this little spinning top down 0.60%. It might pull back, giving a better opportunity if it pulls back to the 753.33 and we get a bullish candle. All right. BX also looking pretty bullish here. So all these right here with the blue flag are looking all good. Look good, great on both the daily and the weekly charts. Here's Blackstone holding up above the 181.32 level, which goes back to this candle, which is from July 25th, 2025. All right, so it's holding up above that level, but it also created a bearish harami pattern. These two candles that you see here, it's when you see a large bullish candle followed by a small red candle, and this is what it looks like right here. Bearish harami, okay, double candle, bearish pattern. The bullish version of that is the bullish harami. That's when you have a large red candle followed by a small bullish candle. All right, and that stands for pregnant, because here's the large body and here's the small body. Okay, AEM, Agnico Eagle Mines, is actually one of the stocks that's in my portfolio, and since they brought it up, I thought I would bring it up as well. Added this one back on August 4th. It's already up over 19%. I'm still holding on to this one. It is building a little bit of a base here, so I'm a little bit concerned, because if it does break down under that low, it could lead to it dropping. But so far, the momentum still is strong, okay? And if we look at the weekly chart, okay, we did create a what's called a spinning top. Now, that's a reversal candle. If it happens at the top of a move, and it's red like that could potentially lead to a decline. So that's why I'm a little bit concerned. Plus, it doesn't help the fact that they talked about it on the show. That might be that's when the stock falls apart. They bring it up on the show, and then all of a sudden the thing, like I've had this nice run in it. They talk about it. Now all of a sudden, it's either going to make it or break it, right? We'll see what happens, but I'll be watching it next week. Here's Home Depot, and I share all my trades, all of the stocks that are in the portfolio, and there's a lot of them. I go over that in the members only video each weekend. I'll be doing it again tomorrow or Sunday, most likely tomorrow. So look out for that, folks. Look out for that. How do you get access to that? Very quickly, let me show you. Right here on my Blue Cloud trading page. All right, there's the link. You click on that link, and then you'll be able to access these videos that you see right here. All of them, going back, for months. Okay, I've been, posting these every weekend, and every weekend's been really bullish and very strong for the portfolio. I've done pretty well, and so basically, here's what you do: you click the link, all right, and what will happen is this will pop up. Blue Cloud supporter. You can support this channel, And I do appreciate everybody that does support this channel so I can keep bringing these videos to you. If you like what you're seeing, that's one fantastic way to help support me for bringing more content to you. Then you can become, the next level up is Blue Cloud Trader. This is the level where you'll be able to access those exclusive member-only videos if you want to see those. And then there's one more level, Blue Cloud Legend level membership. You'll get those member-only videos plus some day trading videos that I have recorded, plus the daily trade updates. Now that's the most important thing. That's where I actually share once you've become a member here, a new tab will pop up and it will say membership. This is what it's going to look like. In this tab, you will see the trades that I place throughout the day, whether I've added positions, closed out of positions. So legend level members are getting all that. And then I summarize it all in the weekend video. So Blue Cloud traders get to still see all those trades, but they get to see it a little late. They get to see they get it all over the weekend, and I kind of try to share as much info as I can about why I added the position, why I closed out of it, and in those videos I also provide an additional 20 stock ideas. Okay, so that's another cool thing for the upcoming week, and I go over the sectors, which ones are strongest. That's important too. All right, let's get back, folks. Let's get back to what we were talking about here. We're talking about AEM, so I like it. There's the daily. Here's the weekly chart. Like I said, it's got that little spinning top. Not too happy about that. Gold in general has been doing well. I mean, I had a few other trades back here that you can see the profits that I made on those trades too. Gold has been a fantastic investment. I just hope it keeps going because I still have a number of stocks in gold. Home Depot. All right, this one's doing pretty good. Here's the weekly chart. All right, and there, you can see it's above the cloud on the daily chart too. So we broke through this level, 414.50. That happened last week on Friday, September 5th. Came down, got under it, found support at the 9 period, and it bounced, and it's back above. So I think Home Depot is looking good still. Here's the weekly chart. Again, looks good. All right, now the rest of these stocks that they talked about do not have a blue flag, and there's a reason for that. It's because they don't look technically sound on either the weekly or the daily chart from the Ichimoku perspective, okay? Like, look at HIMS, for example. It was up 7.23%, but unfortunately, price is still under the Ichimoku cloud. One of the rules of Ichimoku is you do not add positions while that's the case. Okay, you want to wait for that breakout. The future cloud is also bearish. You can see that we do, in fact, have a lower low here. Is it around the same level? It is around the same level, actually. But we have not taken out this high, all right? It did find support at the 200. It is showing strength. There's no question about it. And the ADX looks good here, the directional movement index on the daily. But it's under the cloud on the daily. And on the weekly chart, it's stalling right at that 9 period. So I would hold off, personally. Palantir on the weekly chart popped through the Tenkan-sen. Here it is on the daily chart. It's above the moving averages. The problem with this one is the fact that the faster moving average is still under the slower one. Otherwise, I like Palantir. Okay, it looks pretty good. You'll also notice the Chiku span. Remember I was telling you about that earlier? The white line, that's the closing price, right? That closing price projected 26 periods ago. It is still under that candle. So that's bearish too. What about Adobe on the daily chart under the cloud? I'd skip this one. You can see the downward channel in this one. It's not looking that strong at all. KKR is inside the cloud. I'd stay out of this one for now. Okay. IBM is also under the cloud on the daily chart. No on that one. CME is under the cloud, but finding support at the 200. So if you have a position in this, I'd probably want to see how this plays out. It's got some support right there. You can see that little base that's building. Is it going to break under? Well, then you're in a lot of trouble. If it breaks above, however, okay, maybe there's a chance that it could that's the end of the trend, the downtrend. But you won't know until you see evidence, and we don't have that evidence yet. So CME still in a downtrend here on the daily. BMNR is under the Ichimoku cloud as well. And this is Tom Lee, was appointed chairman of BitMine. Immersion Technologies on June 30th. As you know, under his leadership, BitMine, originally a Bitcoin mining company, pivoted to focus on building an Ethereum-centric treasury, aiming to become the MicroStrategy of Ethereum. I made that note a little while ago. So this one's showing a little bit of strength. It was up 15.28% today, but it's under the cloud. And yes, it does look bullish here on the directional movement index. That's the daily, and here's the weekly. So everyone needs to make their decision about, what kind of risk they want to take. I'm not, suggesting anything here. Bitcoin, okay, above the cloud, but as you can see, IBIT, as you can see, the single span A is under single span B. That's bearish. The faster moving average is under the slower one right here. That's also bearish. But the Chico span is above price. That's good. And price is above the moving averages in the cloud. So there's a mix here. And then the directional movement index looks pretty bullish too, right here. So you've got a mixture of things happening on the daily. On the weekly chart, it does look very bullish. The reason I say very is because it took back its position above the 9 period on the weekly chart. You see that? So it was under for a couple of weeks. And now we had this little bullish harami. Remember I was talking about this, right? The small candle followed by the bigger red candle. That's a bullish pattern. It got above that level, got above the Tenkan-sen. I like it. So I think Bitcoin's got a potential here, but it's on the daily chart, it's not quite there. Remember, Bitcoin is also one of those investments that it's like more of a buy and hold strategy. You want to have a certain very small percentage of Bitcoin in your portfolio, in my opinion, maybe 3%, 4%, 5%, somewhere in that vicinity. It doesn't hurt because it certainly is a investment that has paid off if you've been holding it, since 2024. Look at this. I mean, it's moved up 198.9%. All right, let's go into the Mag 7's Tesla. All right, here's the weekly chart. Broke through the Ichimoku cloud actually last week on Friday, September 5th. I brought that up on the show. It also broke through this high, 367.71. Let's look at the daily chart. You can see that big breakout. Yesterday was the day that it broke that 367.71 level, happened on higher volume. The ADX was moving up. I said everything was looking good. The only negative thing about Tesla still to this day is the cloud. Now, the good thing is today, actually, you can see the single span A is now moving straight up. So it wants to meet the single span B and then basically pop above it. That will be a bullish sign, just like over here, all right, where it got above the single span B. It led to a nice move. So we'll see what happens with Tesla. Apple is on the weekly chart above the Ichimoku cloud, but the cloud itself is still bearish, barely, right? And here it is on the daily chart. It did pop back above the Tenkan-sen here. I don't like the directional movement index information here, though, because the negative DI is moving up, down, positive DI is moving up, but the ADX is still moving down. So there's nothing really special happening here. Meta, momentum is to the downside. It's just going sideways, okay? We get a little alarm. We get a fire truck out there. NVIDIA on the weekly chart is above the Tenkan-sen. Okay, it is above the Tenkan-sen, and that's very bullish. I like that. It was up 0.37%. Here it is on the daily chart. Also above the cloud, above the moving averages. Again, the one negative thing about NVIDIA currently is where is the moving averages? The faster one is still under the slower one. That's about the only thing. And the Chico span is still not above price, the white line there. So it's not quite there yet. You can also see there's a little bit of a decline. There's a little bit of a trend line here. If we take that high there, for example, we draw it all the way across. You can see that little bit of slope downwards, and it has not broken that trend line either. So I would want to wait to see if it can get above that 184.48 for confirmation. Personally, that's just me though. And then for the strongest sectors, we're going to look at these here. Let's see, we got a lot more on there. Okay, so let's start off. XLB still looking pretty good. All right, but still stuck inside this consolidation. All right, it was down 1%. Here it is in the weekly. All right. Not too bad. Silver, much stronger. You can see it's been moving up strongly here on the weekly, and then on the daily chart, it also broke through this support, this resistance level. That's really important. So the fact that it broke through that level, okay, you can see it's almost like a little bit of an ascending triangle pattern. That is bullish. I like it. GDXJ, strong uptrend still. Up 0.0, I'm sorry, yeah, just 0.02% today though. That's the junior gold miners. Here's the weekly chart on a tear. Copper. Whoa, what happened? I accidentally, there we go. Let's put that back in there. There we go. Copper's doing the same thing as the GDXJ, copper miners. Very strong uptrend on the weekly chart and on the daily. Nice 45-degree angle. XLC also looking good. Communication services on the daily and on the weekly. SMH looking good. Last week we got back above the Tengensen, and then this week it's continuing to move up. Here it is in the daily chart. Up just 0.13%. I like the directional movement index. What about gold? Gold has been stalling a little bit, but it's still very, very strong. Okay, so you can see that little base that's being built right there for GLD. All right, it did have this little big drop, you know, that little scary drop where it came down and tested the Tengensen, and then it bounced. So that's good. So we'll see what happens next week, but right now I would say I'm just kind of like agnostic with gold because of that, the fact that it's just moving sideways. On the weekly chart, it looks very bullish still. There's nothing negative here. You can see that the ADX is still moving up on the weekly. Positive DI is moving up. Negative DI is moving down. Volume's still increasing. It's not like the volume is declining, right? There are more participants coming into this after this breakout, right? Broke through that consolidation. That's important. I think there's more room to run. I wouldn't be surprised to see this create another leg up, just like this leg. See that leg right there? You know, it could probably move another, let's see, another 13% or so, or 12.7% to make that next leg. We'll see if I'm right. ETH, Ethereum, here it is in the weekly chart, looking very bullish. Okay, up 5.56% today. Here it is in the daily. So you can see that also just kind of broke this little downward trend, right? So that's good. It broke through that, and it's now moving up. ADX is moving up. Positive DI is moving up. Good. Real estate, XLRE, is bearish harami there. Not ultra bullish on real estate, but it's holding up above the moving averages for the most part. Okay, the Senko Span A and Senko Span B are around the same level. You can see that flat. So I would, you know, real estate, this particular ETF is not ultra bullish like these other ones are. And XHB also dropped a little bit right there to the Tengensen, down 2.2%. That's the home builders. But overall, it looks bullish still in the daily and on the weekly chart. All right. And the same XLK's technology, you can see it broke through that 270.05 level at 270.88. So I think there's going to be a continuation here with technology to the upside. Financials, down 0.43%. We do have a bearish harami right there. But I like it overall because it is holding up above the moving averages and the cloud on the daily and on the weekly. XLY is consumer discretionary. That one's still stalling at that prior high of 240.28. Once it breaks through that, I think, again, it's we can expect we'll see all-time highs for this ETF. GRNY, that's Tom Lee's large cap ETF. Now, on the weekly chart, this week, folks, it broke through that consolidation area. Look at those multiple weeks where it was just going sideways. Here it is on the daily chart, 3 days in a row now above that triangle. I'm sorry, that square, rectangle. The rectangle, folks. I had to go through all the different shapes: circles, squares, triangles, you name it. We got it. It got above it. It's still moving up. So I like GRNY in the positive DI. All right. Over here is above the negative DI. It is declining a little bit here because it's going sideways, but nothing to be too overly concerned about, in my opinion. The rest of these ETFs are not looking as great, okay? I'm just saying there's something off technically. PL, Planet Labs, that's one of our members' requests. So on the weekly chart, had a big move. You can see that consolidation right there. The earnings announcement came out this week. So let's take a look at that real quick. So here's Planet Labs PBC. Let me minimize this a little bit here so you can see the chart. And here is the earnings announcement. And then you can see on September 8th, right, this is the information that we got. It was a surprise of revenue of 11.16. That's actually quite a bit, 11.16%. And it's been moving up. Now, the volume's been declining here. You can see that right there. And this stock is up year-to-date 142.08%. My concern with it, I suppose, is the profit margins are still negative, 34.46. Sales have been increasing, though, significantly. They've also been, there's more outstanding shares, though. They're diluting their stock a little bit. And if you want to know why the stock was up so much, this week, because this week it was up 49.77%. Remember, this is it's a under $10 per share stock. So this is going to move a lot more than a typical, $30, $40 stock. Now, if we look at why Planet Labs stock rocketed almost 50% higher this week, investors liked what they heard about the company's second quarter performance. It posted a 20% revenue gain in that time frame. Investors very much wanted to colonize Planet Labs stock over the past few trading days, thanks largely to encouraging quarterly results published by the company, which provides detailed geographic information about Earth culled from satellites. It had a banner week in the equity market. Let's see. It says here, this week started off on quite a high note for Planet Labs as it unveiled earnings results for its second quarter. The company managed to boost its revenue by a robust 20% year over year to over $73 million. So a pretty small company. Let's get back to that for a moment. Let's take a look at the size of this company here. The size of this company, it is a $3 billion. It is in the Russell, okay, the index Russell. And how many employees are in this company? Just 970. So it's a very speculative stock, okay? A little bit on the riskier side. So, yeah, and that's all I have to say about Planet Labs PBC. Hope you guys enjoyed this video. It is the weekend. I hope you all have a great weekend. And again, if you want to become a member, and if you guys want to also get this software, TC2000, how do you do that? Real quick, folks, let me just show you that. Right here, next to that link to join, which is for these videos, there's this link. If you click and 8 more links, you just click on it. You scroll down a little bit. This is the coupon, $25 coupon for TC2000 software. That's the trading software that I'm using right now. And you add your email here. You download it for Windows. It can run on Mac if you have Parallels. If you don't, there's a web-based version, but it's a little bit slower. Just giving you a heads up on that. And here's the pricing. Okay, and here's the software plans. And my recommendation would be to do the monthly premium. Okay, you'll get it. Like I said, you'll get $25 off of this $50, so you'll only be paying $25. I recommend the premium versus basic because the basic does not have a lot of these features that you see here, like tracking alerts, easy scan wizard. You want to play around with this software, this is the way to go. If you just want to try it out for free, you can try the basic. All right. And as you can see, I have the Premium Plus. That's my plan right now. Okay, so this has even more features. If you scroll down, you've got real-time market pulse gauges, real-time market pulse indicators, live auto-refreshing filters and sorts, intraday performance columns. You can track up to 1,000 alerts. Pretty wild, pretty wild. And you can trade off of your platform through the brokerage. You can see brokerage right here, Y Trade with TC2000. You click on this. All right, all orders are routed through interactive brokers, smart routing. All right, and you can manage the orders and positions inside the TC2000 software. So you can adjust limit and stop orders by sliding around the chart. Attach orders to trend lines. That's another cool thing that you can do. So let's say I draw a trend line on a chart. I can right click and create an order right off that. So if price touches that trend line, it will basically place a trade. And you can see, let me see if they have any info on that. Let me see if they have, let's go to overview real quick. It's got some awards too, by the way, folks. Stocks and Commodities magazine. What else? I think that's all I gotta say today. It's Friday. Have a great weekend. I'll catch you all in the next one.